What's going on, guys? Hope you guys are doing well. This is Nick, and we're going to go through another weekly review from September 2nd through September 6th. So let's get right on the charts and jump to it. What's going on, guys? We're going to start off with DXY here. So, as we know, it's still primarily bullish. This is from last week at market open. This gap happened. We had some bearish news coming out of the trade war. We found support. And then there was some relief news, which kind of pushed DXY up to this higher high here, this trend line point before it reversed. So now today was NFP. We found a little bit of support around this gray zone. It's looking like it's going to go bullish. And there is a little bit supporting that as Powell is in favor of, further cutting rates if need be, if the economy kind of warrants it. So he says that here in a few quotes. The Fed has, through the course of the year, seen fit to lower the expected path of interest rates. That has supported the economy. Yep. So again, they're trying to react and not predict, but prepare and react in which ways are necessary. So he says trade uncertainty is definitely weighing on the business investment and confidence, which as we know as traders is definitely true. This trade war has definitely been one heck of a ride. And however, he expects the problem to be contained. Not going to be a major problem as far as breaking out of the major trend and really shaking up the market. He doesn't think that's going to be something that we're going to see. It may, cause short-term volatility, but nothing too crazy. And he essentially sees continuous growth going forward, especially if they decide to cut rates again, another 25 basis points, which would back up the projection of another, short-term rally on DXY here, which we'll have to see over the next couple of weeks. It's going to be interesting. Let's see what else we have here. Speaking, Federal Chairman Powell said Friday that the central bank's pivot point this year to lower the rates helps sustain the U.S. economic growth, which is true. Speaking during a forum in Zurich, central bank leader gave mostly positive reviews where the U.S. stands now, even while much of the rest of the world is weakening. So, regardless of the rest of the global economic slowdown, he thinks we're doing pretty well in comparison to some of these other countries. So the Fed has, through the course of this year, seen fit to lower the expected path. Okay, so we read that. So pretty much all positive news. You guys can check this out at cnbc.com. There's tons of articles. This one's pretty good. There's a lot of information here. So the headline here says Powell says Fed is not forecasting or expecting a recession. I mean, we'll see. Let's go ahead and cover the news events that happened this week. Just the high volatility ones. So PMI for China is actually up a little bit. That was positive news. We had the RBA meeting, rate decision for Australia. That was on par, 1%. Nothing too significant until later in the week. Obviously, we know NFP just happened today. We got some positive news for U.S. PMI on Thursday. And then here's the big stuff. Non-farm payrolls came in actually less than expected. They were expecting in between 150, 160, but here's the actual at 130K, so that's negative news. We definitely saw that in reaction today. A little bit of positive news here for GDP, for the euro. Here's some good net change in employment for August in Canada was definitely positive. 81K. What was that? Previous was, wow, that's a pretty big jump. They went from negative 24K to positive 81 for employment. That's pretty good. So, and then Fed, as we know, Powell spoke and gave his projections, which you guys can read about again here. So, just a reminder, if you guys aren't in the, any of our social media outlets, Discord, Telegram, make sure to join that. Hope you guys enjoyed this video. So it's been another weekly review, and I'll see you guys in the next one.